Alright, so you actually want to own a pest control business, buy some equipment, mix some chemicals, drive around solving a problem people don't want to deal with themselves, and watch the money roll in. It sounds simple, right? Maybe even boring in the best way, a service people will always need. No product to manufacture, nothing sitting on a shelf losing value. Except it's not simple. Not even close. What looks like a truck and a spray tank operation is one of the most licensing-intensive, liability-heavy, chemically regulated service businesses you can enter. And the owners who learn that before they sign a lease are playing a completely different game than the ones who learn it after. So before you buy the truck, before you mix your first tank, before you spend $1 on marketing, you need to answer one question that has nothing to do with bugs at all. Is this profitable? And is it profitable enough, long-term, to be worth building? By the end of this video, you'll understand exactly what it actually costs to buy and operate this type of business, whether it's profitable and whether it's something you'd want to consider for yourself. This is Actually Costs. Every week, we break down what businesses and potential startups cost to own the businesses everyone talks about, but nobody explains. Subscribe, because you don't want to miss what's coming in this one. Let's start with what it costs to walk in the door. The pest control industry in the United States generates roughly $29 billion in annual revenue as of 2026. It has grown consistently for over a decade. There are approximately 30,000 pest control companies operating in the country right now. That range tells you something important. The barrier to entry at the bottom end is low enough that an individual with a truck and a license can launch a one-person operation. But the barrier to being competitive at the mid and upper tier is substantially higher than it first appears. A solo operator starting from scratch needs to budget for a commercial vehicle, which for a properly equipped pest control truck runs between $30,000 and $70,000 new. Then comes the spray equipment, chemical tanks, protective gear, and diagnostic tools, which can add another $10,000 to $20,000 depending on what services you plan to offer. You will need business insurance. This is not optional in any meaningful sense. General liability coverage for a pest control operator typically runs between $3,000 and $6,000 annually. That's before you add commercial auto insurance on your vehicle. Then there is the licensing, which we will come back to in detail because it is genuinely more complicated than people expect. Add startup marketing, a website, local advertising, uniforms, and 3 to 6 months of operating capital to cover the period before recurring revenue stabilizes. A solo operator realistically needs between $50,000 and $120,000 to launch a credible operation. A multi-truck company entering the market, or an owner looking to acquire an existing route book, is looking at anywhere from $200,000 to well over $1 million, depending on the size of the customer base being purchased. Now, here is the first thing that surprises people who look at this business from the outside. Your most important asset is not your equipment or your chemicals. It is your license. And getting it is not as simple as passing a test online. Every state in the United States requires pest control operators to hold a state-issued pesticide applicator license. Many states require separate licenses for different categories of pest control. A license to treat general insects does not automatically cover you for termites, rodents, fumigation, or bed bugs. Some of those categories require entirely separate exams, separate bonding requirements, and in some cases separate insurance thresholds. In states like Florida, California, and New York, the regulatory framework is genuinely detailed. A company offering full-service pest control across all categories needs to maintain multiple licenses simultaneously. If any one of those licenses lapses, or if a technician without the proper credentials applies a treatment, the company faces state fines, potential civil liability if anything goes wrong, and in serious cases, the revocation of the right to operate entirely. The licensing cost itself is manageable. Exam fees, application fees, and renewal costs typically run a few hundred to a couple $1,000s per license per year. But the time investment to get credentialed, the ongoing continuing education requirements, and the compliance burden of keeping every technician properly licensed, that's a genuine operational cost. It shows up every year, without exception. Let's talk about what you're actually selling. This is where the economics either work beautifully or fall apart, depending on how you structure your business. There are two fundamentally different ways to sell pest control service. The first is one-time treatments. A customer calls because they have a wasp nest or a mouse problem. You come out, you solve the problem, and they pay you a flat fee. The second is recurring service contract. A customer pays a monthly or quarterly fee for ongoing preventive treatments. with guaranteed callbacks if problems arise between scheduled visits. The economics of these two models are completely different from each other, and every successful pest control operator understands which one they are primarily building. One-time service calls can generate strong revenue per visit. A single termite treatment on a mid-sized home can run anywhere from $800 to $3,000 depending on the severity, the treatment method, and the region. A bedbug treatment can bring in $500 to $2,000. A wasp or rodent removal job might generate $150 to $400. Those numbers look attractive. The problem is that one-time jobs do not compound. Every week you need to find new customers to replace the ones whose single problem you already solved. Your marketing spend is constant, your sales effort is constant, and your revenue is only as stable as your ability to keep finding new work. This is the fundamental challenge of a one-time service business. You are always running to stay in place. Now here's the re-hook, because this isn't just a cost story. Even though these numbers might look straightforward on paper, pest control can be far more profitable than most people assume. If you manage the costs properly, if you're operating in a region with real pest pressure, heavy termite activity, rodent problems, seasonal insect surges, the demand is already built into the geography before you've made a single sales call. Combine that with real marketing, consistent video content across multiple platforms, showing your work, your trucks, your reviews, your presence in the neighborhood. A well-run operator in the right territory can out-earn almost anyone still doing this the old-fashioned way, one flyer at a time. Recurring contracts are the reason the best pest control operators in this industry build real wealth. A quarterly service agreement for a residential home might run between $150 and $400 per year, divided across 4 visits. That sounds modest for a single customer, but consider what happens when you have 500 of those customers on a route. That's somewhere between $75,000 and $200,000 in annual recurring revenue. It shows up whether you actively sell anything that week or not. The value of a pest control route is measured precisely this way, as a multiple of its annual recurring revenue. When pest control companies are bought and sold, route books with stable residential and commercial contracts typically trade at 1 to 2 times annual recurring revenue, sometimes higher, for routes with strong commercial clients and low customer turnover. What this means practically, a technician efficiently running 200 residential quarterly accounts can generate a route worth $40,000 to $80,000 on paper as a sellable asset before they've even counted their commercial work or one-time service revenue. Build 500 accounts and you are holding something genuinely valuable. Here's what nobody tells you before you build that route, though. Recurring revenue isn't passive. You still have to show up every quarter to every account forever. The gross margin on a residential quarterly visit is typically between 50 and 70% when you account for those direct costs. After you subtract overhead, insurance, licensing costs, and any employee wages, net margin at the business level for a well-run independent pest control company tends to settle between 15 and 25%. That is genuinely solid for a service business. But it means your profit scales with the number of accounts you can serve efficiently, and that's ultimately a function of route density. Route density is the operational concept that separates profitable pest control businesses from struggling ones. If you have 200 customers spread across a 100-mile radius, the drive time between jobs destroys your productivity. If you have 200 customers clustered within a 15-mile radius, a single technician can complete 5 to 8 stops per day efficiently. Your chemical and vehicle costs per stop drop substantially, and your profit per hour worked goes up dramatically. The companies that dominate local pest control markets almost always win on route density first. They are not necessarily better at killing bugs. They are better at clustering accounts close together and minimizing unproductive windshield time. Now let's talk about the competitive landscape, because this is where independent operators need to think carefully. The pest control industry has been consolidating aggressively over the past 2 decades. Rollins, the Atlanta-based company that owns Orkin, is one of the largest pest control businesses in the world, operating across 47 countries, generating well over $3 billion in annual revenue. Terminix, ServiceMaster, and a growing number of private equity-backed regional roll-ups have been acquiring independent operators at a rapid pace. These large operators have advantages that are hard to match directly. National brand recognition drives inbound leads that independents have to pay to generate. Their purchasing power for chemicals and equipment creates cost advantages on inputs. Their call centers and routing software create scheduling efficiencies that a solo operator managing their own calendar cannot easily replicate. But large operators also have structural weaknesses that sharp independents exploit consistently. The national chains are bureaucratic. A customer with a complaint about a specific technician or a recurring problem that isn't being solved navigates a call center rather than talking directly to the owner. In a service business where trust and relationship are genuinely valued, particularly in commercial accounts, where a restaurant or a food processing facility is depending on your compliance documentation for their health inspections, the local owner who answers the phone personally and shows up the next morning has a real competitive advantage. The commercial pest control segment is worth understanding specifically because it is more profitable per account and stickier than residential. A restaurant that hires you for monthly pest control service is not going to switch providers lightly. Changing pest control vendors means requalifying a new company for their health department documentation, retraining staff on reporting protocols, and taking on a period of uncertainty right before an inspection. The switching cost is real, and it keeps commercial clients in place even when they are occasionally dissatisfied. Commercial accounts also pay more. Monthly service contracts for restaurants, hotels, warehouses, and food retailers typically run between $150 and $800 per month per location, depending on the size and service requirements. A handful of solid commercial accounts can contribute more to your annual recurring revenue than dozens of residential customers. Picture a technician running a full day of routine treatments. He's licensed for general pest, not for the rodent bait station he places at stop 6 because the homeowner asked nicely and it seemed harmless. Nothing goes wrong that day. Nothing goes wrong that month? Then 6 months later, a pet gets into that bait station, and the owner's lawyer starts asking which technician applied it and under what license. That's the moment the business either survives on its documentation or doesn't. Every treatment needs to be logged: product, concentration, method, area, and the licensed technician's name. Not because it's required paperwork, but because it's the only thing standing between you and a claim your insurance won't fully cover. So how much does this actually pay at different scales? A disciplined solo operator running 350 to 400 tight dense accounts generates $120,000 to $180,000 in revenue. He takes home $60,000 to $90,000 after costs, a real income. No employees, full control of your time. Add a second truck and technician to push past that ceiling. A 2-truck operation servicing 700 to 1,000 accounts can generate $250,000 to $400,000 in revenue, with owner income settling between $70,000 and $130,000 once payroll and workers' comp are factored in. Push further into a 5 to 10 truck regional operation with an office manager and a real sales process. You're looking at $1 to $3 million in annual revenue, with owner earnings potential of $120,000 to $500,000, depending on how tight the operation is run. But here's the case that plays out over and over in this industry, and it's the reason so many pest control businesses that look successful on paper quietly fail. An operator signs new accounts faster than his route can absorb them. He takes every commercial contract offered without checking whether it fits his existing territory. Within a year, his technicians are driving 40 extra minutes between stops that used to be efficient. His chemical and fuel costs per job creep up. His revenue chart is climbing while his actual take-home is flat or shrinking. He doesn't notice until the year-end numbers come in. The business that looked like it was scaling was diluting. The operators who avoid that trap understand one thing before anyone tells them: the route is the business. Every account you add either makes every other stop more efficient or it doesn't. And that's the only question that matters before you say yes. Protect the density. Price the contract to hold for years, not just to win the bid. Document every treatment like your license depends on it, because it does. Do that quietly, account by account, for long enough, and this industry pays the patient operator far better than it looks like it would from the street. That's the real economics of pest control, and it's exactly the kind of breakdown we do every week here at Actually Costs. If you want to know what business ownership costs before you sign anything, subscribe. We're not slowing down.